We're going to have an absolute biblical collapse of our standard of living. And no one even has a clue that it's coming.
Hey friends, thanks so much for tuning in. We have back on the line ultimate truth teller Bill Holter, who's rapidly becoming one of the premier and most prolific alternative financial media pundits out there. Bill, welcome.
Thanks, Sean.
We have so much to talk about. I want to just set the stage, guys. We last spoke with Bill back on August 22nd when we discussed monetary warfare and the Tianjin, China event. And this latest article really takes us back and starts from that point and gets us up to speed. In your latest, Bill, you write, something just happened, something changed 3 weeks ago. It all started with China announcing 600 additional tons of gold, followed by the IMF's rebuff of China, the 3 yuan devaluations, and 3 coincidental explosions. It was at that point equity markets around the world began to plummet. So that sets the stage for our conversation, Bill. Why don't you take it from there?
First off, equity markets around the world increased the speed of their descent. Prior to August 22nd, there were probably a dozen major bourses that were already in bear market, more than a 20% drop. And it wasn't until then that the volatility really started to pick up in the U.S. and we broke down. We broke through all kinds of trend lines. So that was kind of the demarcation line for the U.S. That's when it finally started to bleed over to our shores.
Yeah, that's right, Bill. And you wrote in your latest that you believe this spillover into U.S. equity markets tested the plunge protection team's limits, which evidently at that point were apparently $23 billion for that week, meaning that the plunge protection team has really unlimited power to manipulate these markets. But even that meltdown tested their ability to keep this Ponzi scheme propped up, correct?
Right. The 23 billion is a figure that came out after the fact. It was a figure that obviously they're not going out and using 23 billion to buy individual stocks. They're going out and they're buying futures. So the 23 billion might have been times 10, 230 billion. I mean, you could have 50 to 1 leverage or 100 to 1 leverage. So now you're talking 23 billion turns into a trillion or 2.3 trillion. Who knows? They were severely tested a week ago, Monday, when we opened down 1,000 points, rallied it back to being down 100, and still closed down 600 points. They were severely tested, and it's not over. This is not over by a long shot. Another thing during the week, this past week, was that China sold 100 billion, or in 2 weeks' time, I guess, sold 100 billion worth of treasuries. And it was really clever the way they did that. First off, with the U.S. markets dropping, there was a fear bid. So there was more bidding from around the world than normal because markets were melting down. The other thing is China devalued the 3 days in a row. Then they started to sell the treasury. Devaluing the yuan by 5%, that revalued their treasury holdings up 5%. So in essence, what they did was they devalued their currency and then they made the trade. So they actually clipped an extra 5% on that $100 billion trade. And since then, now the yuan has been revaluing higher. So we've got gyrations, and these gyrations of 3-5% or more in currencies, you have to think to yourself, what does that do to the derivatives outstanding? I fully believe that there are dead bodies, dead players strewn all over.
And it's getting hard to cover up those dead bodies, I would imagine. Well, Bill, we see a lot of shenanigans going on in the GLD. You note in your article here that GLD inventory supposedly rose over the last 2 weeks, even though gold was weak and being sold. This was against a backdrop of very deep backwardation. The mystery of the GLD continues to deepen because, billionaire Stanley Druckenmiller has openly announced that he purchased 2.9 million shares of GLD, as even this buddy of George Soros wants to incubate himself to some degree against a coming economic collapse. But I think it's hilarious that he bought the GLD unless he intends to take delivery of physical, because the GLD is just more of a paper Ponzi. Unless you have physical gold, he's not going to get that much safe harbor, is he? So what's going on with the GLD?
Well, it's really hard to know because it's cloaked. You don't know whether the inventory, the 600, like what do they have, 670, 80 tons, something like that, is that real? And it's really suspect that Druckenmiller would dump that type of capital into GLD as opposed to buying physical gold outright. Maybe it was very difficult. He tested the market and found that he couldn't source that amount of gold when he did it. It's hard to say why he would do that, because to me it doesn't make sense. It's not owning gold. It's owning paper.
Right, and maybe it's propaganda too, to get the common man to follow suit. And instead of buying physical gold, you're going to get a lot of uninformed investors who want to follow suit
Right.
and buy the GLD. One wonders. You also know that there were several major anomalies in gold specifically. As of Friday, there were 63 August contracts still open, even though the
Right.
contract went off the board, which you say has never happened in 40
Never.
years. How's that even possible?
I don't know. I know that there have been some inquiries to the CFTC as to how that's possible. How does it function? I don't understand the logic behind it. We've not gotten an answer back from the CFTC as to how it's even possible. It's never happened before. You don't have a contract that goes off the board, yet there are still open positions.
Now the mystery deepens even further as we talk about silver, and this is exactly what we should be talking about, Bill, because now we see China openly selling treasuries and warning Washington. Okay, they're getting out of the dollar. The collapse that we're documenting is real. It's happening. And over in silver, they had confirmed volume last Thursday of 122,482 contracts, and you write, did you know this represents 612 million ounces of silver, over 87% of annual global silver production? That's how insane the manipulation is, Bill.
It doesn't really make sense that you could have a commodity trade nearly 100% of annual production in however many hours the COMEX is open. What is it, 5 or 6 hours? It really doesn't make sense. Yeah, I'm sure you had the same individuals or same institutions buying, selling, double counting, stuff like that. But still, it just doesn't make sense. And what really doesn't make sense is in the gold market, you have severe backwardation in London. Silver market, you have severe, very large premiums. The Royal Canadian Mint has even stopped making shipments of silver maple leafs. So if silvers and gold have been sold and panic sold, the street should be awash with silver. There should be silver. You should be able to pick it up on the street practically the way it's been sold. But the Royal Canadian Mint cannot source silver. And interestingly enough, I believe it was either Friday afternoon or early Monday, the U.S. Mint has now their premium that they're charging their dealers to $3.50 per coin. That's a 23, 4, 5% premium on a coin that is made with something that's supposed to be super plentiful because everyone's selling it. So what's the deal? How is that explainable? It's not.
No, it's not. And you write in your article, doesn't this silver trade go against commodity laws? Well, of course, that's a rhetorical question, Bill, as you know. Of course it does. And if we step into the Wayback Machine to February 23rd, 2015, we see this article from Bloomberg. The U.S. Justice Department is investigating whether the world's biggest banks manipulated prices of precious metals such as silver and gold as it pushes to wrap up probes into currency rate rigging, according to people with knowledge of the matter. At least 10 banks, including Barclays, JP Morgan Chase, and Deutsche Bank, are being probed by the Justice Department's Antitrust Division, said one of the people who asked not to be identified because the matter is confidential. Well, of course it's confidential, Bill, because they don't want the truth to get out that these banks are manipulating precious metals to keep the world from running from the dollar and into precious metals.
Right, that's exactly correct. And if you think back to the CFTC, I think they've had two investigations now into the silver market, and the last one was a 5-year investigation, and they came out and they said nothing, quote, actionable. They didn't say that they didn't find anything. They said they didn't find anything actionable. And if you think that through, what does nothing actionable mean? It very well could mean that they found that some of these banks are and they're shielded. They're federally shielded, basically.
That's right. They're
So it's
federally.
not actionable.
That's right. I 100% agree. I've been nodding as
Okay.
you said that. It's not actionable because it has to be done to preserve the dollar. This is
Right.
mandated manipulation. This is approved manipulation. It's really the last resort. All they can do is manipulate the precious metals. All they can do is try to manipulate the world into staying in dollars. And you know what, Bill? At the end of the day, we, you and I, our families, those listening, your families, we need these countries to stay in the dollar because the alternative is a crash, the likes of which will be biblical. And I think it's coming.
We're going to have an absolute collapse of our standard of living. That's what it amounts to. Because China has already made the decision. China is already dumping treasuries, and it's clear that once they dumped that 100 billion of treasuries, they then turned around. Once they settled, they then turned around and dumped the dollars, and they bought yuan. They supported their own currency. So it was like a 1-2 punch, and that's why last Friday you saw the yuan strengthen versus the dollar, because the PBOC took those dollars from the treasuries and turned them into yuan. We're going to have an absolute biblical collapse of our standard of living, and no one even has a clue that it's coming.
Yeah, many of our friends and neighbors have no clue that this collapse is coming, Bill, and many of our friends and neighbors have no idea that China has sold $100 billion worth of Treasury bonds in just the last 2 weeks, as you note. It's absolutely epic what's going on, and, the mainstream Mockingbird media, CNBC's not going to report this stuff. I mean, don't you find that amazing that the only place people can get this kind of information is from your site, is from SGT Report, is from Zero Hedge, Economic Collapse blog. There's so many people in the alt media trying to wake the masses, trying to protect people from this coming collapse. There's so many of us trying, but you're not going to hear this information. You're not going to hear the real news from the Mockingbird mainstream media. It's just stunning.
But what you won't be able to hear this time on is no one seen it coming, because there's too many now that are on the record detailing exactly how this is coming.
Yeah, that's right. Now let's talk about this reverse QE, because as China sells bonds, who's going to buy those bonds? I mean, here's the problem the Federal Reserve has. Previously they could offshore our debt. They could offshore the hyperinflation bill. But now that China is openly saying, we're done, as Jeff Nielsen has recently noted, hyperinflation is now baked into the cake. It's John Williams has been saying it cannot be stopped. And he was saying it long before China started selling the bonds.
Right. You have to understand that we did not have in any big inflation or hyperinflation over the last 20 years because our debt it's been sterilized basically. China would buy it and they would sit on it. Other countries would buy it and they would sit on it. Now what's happening is the debt is coming back. China's begun to sell. There's obviously going to be other sellers. Who's going to buy it? The only one that can buy it is the Federal Reserve. They have no choice. They have to buy it or watch interest rates go up, which if they're really serious about tightening and raising interest rates, that would be one way to do it. But they can't be serious about raising interest rates or tightening because you'd have an implosion immediately following any type of announcement. So the Fed is in a box. They absolutely have to buy every Treasury bond that's sold or watch interest rates go up. And the problem with that is they already have a bloated balance sheet of $4.5 trillion. So you get a couple 3 more trillion of treasuries coming back home. Now all of a sudden they've got a $6 or $7 trillion balance sheet. It's taking up space, in other words, on their balance sheet. It's forcing them to do something that they prefer not to do, and at some point in time, the gate just opens and confidence collapses, and there's your hyperinflation.
Yeah. Well, as I've long been saying and discussing with you and Andy Hoffman and others, Bill, I think what's going on behind the scenes is the ultimate Shakespearean drama, the horror unfolding behind the scenes at the U.S. Treasury, at the Federal Reserve, at the highest levels of the international banks, is the story of the century. And it's really very frightening because, as we reported back on August 22nd, there was the Tianjin event, which was awfully coincidental, coming within, I think, 48 hours of the first yuan devaluation. And now on Monday, a third explosion has rocked China, this time in Dongyang City, a city of 2 million people. And by the way, the only video that I've seen of that actual explosion, I've seen only a picture. The video associated with that explosion appears to me, Bill, to be one of the camera angles of the Tianjin event. So I don't know what to make of the Dongyang City explosion that reportedly happened on Monday. But the bottom line, Bill, is that it's starting to be pretty far-fetched to accept all of these major significant explosions in China and in Japan at the U.S. military base as being merely coincidence.
Well, it's too squirrely for words. At this point, it is certainly not a coincidence. I mean, somebody who's even sleeping realizes that these are not coincidental.
Yeah.
And I mean, when was the last time a U.S. munitions depot blew up?
Yeah. Yeah.
I mean, maybe the era of Vietnam. Who knows? I mean, I don't know. But in my memory, I don't remember any munitions dumps in the U.S. blowing up.
Well, why don't we round out this call by talking about the convulsion in the world markets. Your supposition is that a lot of this involves leverage, most likely tied to derivatives. And I just want to note that stocks had the worst August decline in 17 years. What we're talking about, guys, here is not hyperbole. We're talking about an economic collapse that's in progress. And Bill, you concluded your article here with something very important. You say it's important to understand that something very big has happened and trends are changing in many markets.
Right.
So why don't you give us the takeaway on this?
All markets have been stretched, compressed. You look at the equity market, you look at the credit markets, the bond markets are zero bound. You look at the oil and commodity market, gold and silver, they have been compressed to multi-year lows. And when something changes, it means you're looking at trend changes, and you can clearly see it. You can clearly see it in equities. Our market has broken a 5-year, 6-year trend line. There's equity markets all over the world that are down 30, 40, 50%. So those are deep into bear markets already. You can look at the dollar, and you can see that one. There's a market that was 100, now it's 95, so that's starting to roll over. And we know from a fundamental standpoint the Chinese are selling bonds and selling dollars. So it's a trend change. And what worked for however many years with gold and silver, where they've diluted the physical supply, or they've diluted the price with paper contracts, 100 ounces or more per every 1 real ounce. Now, when this thing turns, you're going to have 99 people or more looking for their actual silver or gold, and it doesn't exist. So now you've turned those people into buyers. And forget about the ones that are short that are going to need to cover. So you're looking at trend changes, and the most severe is going to be in the gold and silver market. When I say the most severe is going to be in the gold and silver market, you have to understand that the two ranges are 0 and infinity. And stock markets, bond markets can only go to 0. So they only have a certain percentage that they can lose.
Yeah.
Whereas gold and silver, what is the upside currency you're counting in it goes to 0. Infinity. And that's a pretty big number.
Yeah, and let me help you quantify that for the listeners. This is an extremely important point to make. When I made my micro-documentary, The Silver Perspective, back in, I think, 2011, the 1980 inflation-adjusted all-time high for silver, according to John Williams at Shadow Stats, was $138 an ounce, okay? Flash forward to 2015, and according to John Williams, based on just the money printing that's gone on since I made that video, the 1980 inflation adjusted all-time high for silver now, in today's dollars, is $601 an ounce, Bill. And what you're talking about is what happens when all the rest of those dollars comes home. What happens when hyperinflation hits these shores? How high will the prices go? Well, it will be uncountable in fiat dollars.
Exactly. Uncountable is the word, Sean. We have no idea how large the money supply is going to become, and we have really no idea how small the supply actually is.
Okay, and to summarize your article, you ended this article very powerfully, Bill. You say that the leverage in all markets suggests a holiday will occur because this unwinding can't be orderly. And the unwinding, by the way, will need to undo all the credit built upon, and the credit, all the damage that's been done going all the way back to August 15th, 1971. And Bill, what happened in 1971?
Well, that was the date that Nixon closed the gold window, and we basically defaulted.
That's right.
We defaulted to the world. And all of this leverage that's built up, how does it turn around and unwind the position? Who's the buyer? There is no buyer. It's over.
Yeah, it's over, and I wonder, Bill, an interesting exercise might be for those who wonder, well, how low could the Dow go? How low could the NASDAQ go? I don't think the NASDAQ was around in 1971, and I wonder what the Dow was trading at in 1971. What, 800?
Yeah, 700, 800, 900, something like that. It was definitely not. It was under 1,000.
Yeah. So the great unwinding is at hand, folks. And Bill Holter, a good friend of ours, a friend to SGT Report, a friend to Truth, is here to help break it all down and document the collapse. And Bill, I can't thank you enough for your expertise and your time.
Thank you, Sean. It was my pleasure.
Bill, before we let you go, please tell folks about your collaboration with Jim Sinclair and direct us to the correct website for that.
Yeah, our work can be found at jsmindset.com.
All right, guys, the one and only Bill Holter. Bill, thanks again so much for your time. We very much appreciate it.
Thank you, Sean. My pleasure.
And guys, thank you for your support at SGT Report, thephaser.com, and thelibertymill.com. Real news 24/7. Buckle up. God bless. Bye-bye.